There could be a few things going on here. They did explain the leap year, but that's not enough. The miss is still higher. So it's either that retail has slowed down, which it very well could have after a very strong holiday, or they're just being conservative with everything that's going on with tariffs and so on in the marketplace today.
Yeah. It's kind of interesting, too, because the commentary, Andy Jassy in the press release talking about, kind of what a great holiday shopping season it was for them. And just even his first commentary, everything just seems very, very optimistic. So, what would be the question you'd want to ask Andy Jassy about this forecast?
Yeah, I think things were very, very strong in the fourth quarter. So why the slowdown in guidance? I get the leap year impact, but there's more to that here. So what are they seeing that we're not seeing? I think part of that will be tariffs. But aside from that, AWS should still be strong. So we're waiting to hear on the call what he has to say.
Oh, so the forecast has to do their concerns about tariff costs or impact?
It could, right? Because we do know that they're going to be impacted to some extent with the tariffs because they do have a large 3P business. 65% of their GMV, we estimate, is from 3P. And a lot of those sellers are China-linked sellers.
This operating income line item at the bottom line here, 14 to $18 billion. The estimate was for $18.24 billion. Where's that miss coming from?
That miss has to be, they must be anticipating, if we look at the guidance, right, and you look at AWS margins in the quarter, they had a very sharp beat. So the question is something going on in AWS for the margins to be guided lighter? Because as we know, AWS is the driving force behind Amazon's profitability. And when there's weaker guidance, that's usually where we lean into for more input.
It's so interesting. We look at these companies, they're so important, the Mag 7, right, in terms of what their businesses are telling us, because they're so important in terms of market momentum and market moves. How do you characterize this quarter right now for the company?
The quarter was exceptionally strong. The quarter was very, very good across all fronts. Retail was strong. AWS was strong. Advertising in line. Physical stores was even stronger. So a very good quarter on the top line and across the margin. But the guidance is light. So it's hard to connect the dots on why such a shift when we ended with such a strong quarter. And really, we're looking to hear that on the call. So number one question is why have things decelerated or why the conservatism in the guidance?
Would it bother you as someone who follows a company like this? Because Tim and I have certainly either on air or off air, talking to leaders, certainly heads of companies who are like, we're watching Washington and we kind of have to go day to day. We just don't quite know all of the policies that may come down that impact our particular industries. And it sometimes goes back and forth on a day basis. And this is, kind of what we're hearing. So they're taking it day by day. Could this just be Amazon being cautious?
Absolutely. If that is the answer that we hear on the call, then I would say that they're just exerting more caution and things should be better than what they're guiding to should the consumer continue to spend, because there's no other reason, unless they're seeing a deceleration, a sharp deceleration, 1Q to date, for them to offer weaker guidance.
Well, could things like tariffs and stuff, like you think about what it means for Temu and Shein, is that a plus for Amazon possibly?
It absolutely is. So there's a plus and minus here. So when you think about tariffs, the added tariffs, the 10% increase on goods from China, is a negative for all of retail, including Amazon, especially their first-party goods where they have direct ownership and exposure. But when it comes to the competitive playing field, by taking away the de minimis, now the playing ground is really leveled and they don't have that extreme competitive threat that they had with Temu and Shein anymore. So that is a plus where they can now offer comparable prices and keep margins relatively constant with their competitors.